Hello, welcome to another update on the Gold Forecaster Index, the predictor of gold prices. So, I have a lot to talk about. It's not even funny anymore. Um, so, last time we said that gold would be flat, and that's exactly what happened. Um, well, it went up a little bit, so I'm really surprised that it did go up a bit, but essentially it's flat. And now we have a new data point and it's positive. So when you look at the gold forecaster index, you see that it's very positive. It's going up here. Well, it's not really going up to the high here, but this is a buy signal. And also in the other chart here, which is a more leading indicator here, is also going up. So I expect at least that the gold price will stay at this level and test the 1400 level maybe, and then it can go higher. But I have other things to discuss now, um, more fundamentally. But let's go over the gold forecaster index further. Let's go over the leading indicator for the United States. You can see here that we saw a really big drop here. So the economy is really not doing well. It's not crashing yet, but yeah, from May here to June, we saw a pretty big crash here. So I expect that the coincident indicators for the economy will be going down soon. And that's why also the Federal Reserve had done something, but we will talk about that later on. Capacity utilization is still languishing here, so it's not going up. So I think inflation will be subdued. The producer price index is still down, percentage-wise. So this also confirms that inflation is not going up at this time. So this can come down some more. We had also a trade balance number for the United States, and basically it's flat. It's at 661 billion. So it's basically flat, but the trend is still down. So President Trump is not able to get into the plus with China just yet, and this will be going down going forward. So the budget deficit is in a downtrend. So this is bad for the dollar. And yeah, so that's what happens. Let's go to all the posts that I posted on the blog. I found a new correlation here about the put call ratio. So basically when puts are high, you should buy stocks. And we see here a spike to 30, 40. It could go higher to 60, but I think this would be a buying opportunity. So every time when this spikes, you see a bottom here. So we are almost approaching a buying opportunity in stocks. But this is only short-term trading, so you need to be careful here. Another thing that I also saw was that the premiums in the PSLV Sprott trust has been spiking. So I can show you that here. You should monitor this yourself. And here you can see the premium is going above zero again. So this is definitely positive for silver. So sentiment is going positive again, which means they will be buying physical silver. That will take the supply a bit away. So I do expect a spike in silver soon. What do we have more? New Trump tariffs. Yeah, this is very important. Very important. So President Trump has announced that he will add another 10% of tariffs on 300 billion of Chinese goods in September, 1 September. And of course, you know what tariffs do. Tariffs are bad for efficiency in the economy, which means inflation will be going up, especially for the importers and exporters, uh, the United States. So they will pay higher prices, especially the retailers who buy 60% to 80% of their things from China. So you can see here higher inflation is good for gold and it will always lower the GDP. Historically, that's the truth here. And you will see lower oil prices because the GDP goes down. And it's bad for the US dollar because of higher trade deficits. So, yeah, and lower GDP also means that the bond yields will also go down because there's lower growth. So we have both lower bond yields and higher inflation. And as you know, that's the perfect recipe for higher gold prices. And if you see that also the oil price goes down, that means that the mining stocks will be doing very well here in this scenario. So you saw that the oil price went down when this was announced. The dollar went down and yields went down. So that's exactly what I predict here. What will happen? Very good for gold mining stocks. Now let's go to the next one. Um, yeah, I posted here something about the shale gas bust, and I think that oil will be going down here, which will make sure that the rig count will be going down. So less rigs will be drilled out, so the production will also fall. And these high-indebted shale gas producers will probably go bankrupt in a few years from now. We saw here a 40% decline in Whiting Petroleum, for example. So that's a sector that you do not want to be in. And now another post here is about gold demand and supply. So we saw that central banks are now buying gold, not only the Eastern central banks, but also the Western central banks, and that they will be doing that somewhere in September. That's when the central bank gold agreement will end, and then it's open season for the European banks to buy gold. So that's where the demand is coming from, and it will go higher in September. Now let's look at the supply. Supply is still very high, 2,300 tons, which is higher than gold demand. So gold won't be going up that fast. That's because there is still a lot of supply coming onto the market. Let's go to the next post. Yeah, this is also very important. We had an FOMC meeting where the rates were cut by 25 basis points as predicted. And what I didn't predict, which is even more important, is that they will end QT in August. So they already ended it. So that was a surprising event, which also put pressure on bond yields because the Fed is now not anymore selling the bonds or letting it mature, but they are effectively rolling it over again. So this trend down has stopped now. So this is now going flat. So actually it's not selling anymore. So they are actually, you can see it as buying now. So they're buying the bonds. So that's why the bond yields went down. And that's good for gold because when you go back to QE, that's an increase of the money supply and that's inflationary. So these are very important events that happened in July. What the Fed did and also what Trump did on the tariffs. all very good for gold. Yeah, so that's what happened. They are halting the balance sheet at 3.8 trillion, 2 months earlier than the end of September. Okay, the following post, yeah, this is just a chart of the economic policy uncertainty index, and I saw that there was a gap down, so GDP is going to go down. That's a certainty. I do not know by how much, but it will be going down. Another evidence here is Chicago PMI is also going down, which means GDP is going down. That's a second evidence. Also a reminder here, we are now in August, September, so 2 months here will be positive for gold. So if you want to buy gold, this is exactly the time to do it. Oh, another important update here. I told about the central bank gold agreement. So this will end in September. You can look at the press release. Basically, it says that the agreement is no longer necessary because European banks are not selling gold anymore. And that's also what you can see here. They are not selling gold anymore. So the blue line is the Western central banks, and they are not selling anymore. So if they are not selling anymore, it means that they will be buying. Okay, so in September they will be buying gold, probably. We already see that Hungary, Poland, they're all buying gold. So now also the central banks in this gold agreement will be buying gold again in September. So everything is based on September. So we still have 1 month to buy gold, and then it will skyrocket probably in September. And that's also because gold is now money again with the Basel III. So that has also implication for gold as a monetary asset. So central banks need to have gold now. Let's talk about this. This is about the silver whale, which they say is China, but well, you can go to the Shanghai Futures Exchange here. There is a site therefore, and you can click on the weekly inventory, and it's always published on Friday. You can scroll down and then see silver here. So the silver warehouses this week was on 1 million kilogram, 1.4 million kilogram. And basically it means that the Chinese are buying silver here. It's still going up. So I expect it's not going down. They are still buying silver. So I expect that silver will be going up soon. And this chart is, yeah, it's about that the Federal Reserve is now stopping QE. And the ECB has announced that they will do a rate cut in September and start QE again. So again, September. Everything happens in September, okay? The ECB is going to expand its balance sheet again in September. So I don't know about you, but next month is a very bullish month for gold. Okay, I also talked about Almeida Minerals. You can look at my video on this. If you know that gold and silver are going up, then this will probably be a winner. There was also talk on silver holdings that were going up. You can see all the buying here. Of course, if SLV holdings are going up, then probably the silver price will be going up. Another evidence here on what the GDP will be doing. So freight rates are in decline. This trend is declining and it's not going up soon. So you know that this is correlated with real GDP. So I expect GDP to crash down. You can clearly see that here happening. So do not think that the economy is doing well at this moment. So GDP will be going down and bond yields will go down as well because of the low growth. But do we have more? Oh, this one first. Yeah, this is just a post about Bitcoin and altcoins, saying that Bitcoin is a currency and altcoins is not a currency. So that's why I would recommend to go to Bitcoin instead of altcoin. This is again the post about oil production, which is going down. And here about inverted yield curve that's about to revert. Because I look at the 3-2s versus the 2-1 bond yield, and I thought this was going up, but I'm not pretty sure now that is going to happen because the Federal Reserve did a small rate cut of 25 basis points. I think that's not enough to revert the yield curve. We can do a small check here. Now we're looking at it. So you can always go to my correlations and then click one of them. This is a leading indicator for this one. Let's see what is happening. So I thought this blue line was going to go back up, but you can see it's now a bit flat now, and it's even trying to go down here. This latest data point is going down. So I'm not sure now we will get a reversion. It looks like it's going more inverted now. Yeah, so I expect more rate cuts from the Fed to get this reverted again. Let's go to the next post. Where do we net interest margins declining? Yeah, that's I also predicted that. You can see that most of the banks' net interest margins are declining because of the inverted yield curve, and they will be declining more and more because the 10-year yields and the 30-year yields are declining, so banks cannot make a profit anymore. And the Federal Reserve only decreased by 25 basis points, but so this net interest margin is going to decline some more. And banks will not be able to make a lot of profits. Yeah, this is just the correlation between Shanghai Futures Exchange and the silver price. This is just a chart about Bitcoin ATM growth. So growth is going more and more up. So Bitcoin is probably going up. Yeah, China power consumption. You can see here that year-over-year growth is going down. So GDP in China is going down. So economy is slowing down over the whole world. Global slowdown. That's what you can see here. There's some interesting info here on the maturity profile of the debt. can see that it's at around 7 years. And well, what do we need to do with the maturity profile? Do we want to get it up or down? So normally you don't want to get it too much up, but you also don't want to get it too much down. When you look at the correlation, maturity is negatively correlated to the budget deficits. So we have higher budget deficits. Now you can see that here. Then you want to lower the maturity because it's easier to finance budget deficits at lower interest rates. So lower maturity is lower interest rates. But on the other hand, when you look historically, the higher the debt, the higher the debt, the higher the maturity is. This is a long-term chart because you do not want to have all the debts at low maturity because you cannot pay it off. So you want to lengthen the maturity a bit. So now we are at 7 years, and so the government has a small problem here. Do they want to lower the maturity or get it higher? They are a bit stuck in a difficult position between interest rates and between the huge amount of debt that they have. And this is the profile here. So average is 7 years, but they also have a lot of debt here. 1 month, 6 months, 1 year. And so a lot of that debt will mature in the next few years. Um, Next post. And this is about the credit spread versus GDP. So apparently, when you subtract the AAA effective yield from the 10-year yield, then you will have a spread. And that's this green line here. And this is a leading indicator of GDP. You can see if it goes down, then the GDP goes down. Goes up, then GDP goes up. And lately, from 2015 here, you see that this is going down. So probably GDP will be going down. That's another evidence. This blue line will be going down. So we can be very sure that GDP is going down. And here again, the PSLV premium. We already talked about that. This is a correlation between gold and negative yielding debt, which is going up. And with the ECB going with a rate cut in September again, this will be spiking even more. How long can the 10-year German bond yield go? Well, it's now at minus 0.44 or something. So they cannot do this uh, some more longer. That is impossible. And I have calculated it. Well, they are still here, but they can go lower till -5, but then um, rate of returns are going negative here, so they probably can do it till -5%, I guess. But if it reversed, then you will get huge losses. So this is unsustainable. They can probably get it to -1, 2%, and then you will have a problem. When to buy Bitcoin? Oh, this is a nice chart when you need to buy Bitcoin. So you always buy when there's a halving of the mining profits that you get. So the next halving will be here in 22 June next year. So probably Bitcoin will be going down, 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 and then it will be going up again next year to the next high. So that's an idea for you. Okay, so we have now gone through all the posts. So the conclusion is gold forecaster index is positive. Economy is not doing well, and September is the month where everything comes together for gold, and we will probably go higher, shoot above, I would say it will shoot to 1500. Let's see if it happens, and I will see you in the next video.